Cool. We are live. Good morning, everybody. Casey here from Territory 3, Kiwi Landing Pad Reimagined. Today I'm very pleased to be joined by Emily. Oh, we're getting a bit of back feed. If you have two tabs open by chance?
What was it? Sorry.
Make sure you've got one tab. Could be the challenge. One Crowdcast tab. Oh, I think it's gone now. Oh, it's on mute. It's kind of funny, folks. We obviously jumped on a bit earlier to do a tech check to make sure this is all smooth. So it's just like absolutely Murphy's Law that as soon as it starts, that occurs. I think it's fixed. Yeah.
Perfect. All right.
That's cool. Yeah, I'm super pleased to have you here, Emily, to talk about all the good things in the fundraising landscape, specifically with Snowball Effect. You've got heaps of context coming from credibility of being a founder yourself and having done a successful raise and been all across it. Good stuff. So for everyone listening today, the format is very much centered around how Snowball Effect can help, what they've been working on in different raises, details into that, and then how they can help you with your specific, challenges you might be facing. We'll invite questions throughout the webinar, as we always do. We've got a number of questions lined up that Emily and I want to kind of dig into, but as always, we also want to make this a very kind of real conversation. So don't hold back on your questions. Ask the questions you're genuinely kind of grappling with, because we want to make this as valuable as we possibly can for you. Without further ado, Emily, should we start maybe with your journey with Roma? I know that you've since expanded that throughout New Zealand, Australia, Asia. I'd love to hear more about the journey of that, on how you're, if I understand it correctly, helping match people with hidden gems in local places when they're traveling.
Yeah, absolutely. So I think, like any sort of founder out there, you sort of fall into it. You sort of see something bothers you enough, you want to fix it. And for me, I was working at the time, saw a massive gap in trying to find really good photos. So really struggled with what was available on the traditional sort of tourism maps and the tourism suggestions. So went into it. Obviously had to put up a whole lot up front when it came to development. So wasn't a developer myself, had to learn the hard way. Obviously considered getting a co-founder that was a bit more technical, but that wasn't really, sort of appropriate at the time. So went in, developed Roma, which kind of surprisingly, really surprised me. We were still in development phase when the developers actually wanted to invest. So I was very fortunate. I think a lot of early stage companies sort of hope to have the investment very early on, especially to reduce the overhead costs. So they invested early, so I had to learn the hard and fast way around what that looks like. Like any founder, I was probably overprotective and very underskilled in this space. So launched that through New Zealand. We had, I think it was 60,000 Kiwis download it in the first few months. We had a total of around 120,000 people on it. It just went crazy. Like through New Zealand, it just went viral, and really learned how to launch a product, and especially at low cost, which is something we see a lot of companies struggle with, is how to get into market without turning on heads. So had sneaky ways around sort of avoiding costs there, but went into market. Then we ended up launching in Australia, which was quite a big learning curve. It was a lot easier than we thought, but purely because we are a consumer app. So that was really exciting. We noticed, we'd launch in Melbourne, and then we started noticing Sydney pop up and all sorts. So it was really quite cool to see the natural organic growth that an app can have. And then obviously went into the likes of Singapore, noticing users coming in from New York. Really, really cool content, really cool countries. But hit that point that I think everyone comes up to, which is how much money have we got, and what are we actually going to do now? Because we can't just stop, and we've got to keep growing. And there's a lot of things we need to work on, mainly development. Like anyone knows, it's sort of a very costly experience. So went into looking to raise again, and I was fortunate. I started talking to angel groups because that was sort of all I knew at the time, but sort of got led down the garden path for quite a few months and realized that I was running out of time. So mentioned it to one of my advisors, and funnily enough, he'd actually said to me, look, I'm keen to invest. Let me talk to a few buddies. And within 1 week, he teamed me up with a meeting with a group in Auckland, a call with Hadley from Swiped On, and within, I think, 1 week, he'd had 200K committed pretty much. So it was quite crazy timing. It was, I think, November coming into December. So obviously trying to close out a round in December was another learning curve. Thanks to Sim and Stewart documents. So sort of scratching my head during Christmas trying to put it together, but we closed it out at a total cost of, I think it was $400. Yeah, 200K. Yeah, it was really good experience, but I think I was definitely very fortunate, and a lot of my friends also raising capital were telling me sort of the hard yards of what was actually going on. So yeah, it was definitely, then we sort of went back into market for the second round and definitely got a lot harder, and you know, it was going to be really like, so yeah, and at that point, obviously then we had a group looking to acquire us. So it was what was turning from investment to then actually an acquisition. I did the mistake, like I think quite a few people can get a bit too excited about it and over dedicated to it. And yeah, so then had 3 other groups come on board looking to acquire us, or so it got quite competitive, which was exciting, being in the middle of this sort of luck journey, I'd say. But yeah, I was over in Bhutan at the time in February last year when we were just talking terms, and obviously COVID hit, so we had one by one slowly fall off, and yeah, really had to face the sort of front of what that looks like, and the issues of probably over dedicating myself to an acquisition with very little on the ground, you know, development wise.
Yeah, wow, that's a huge amount of learnings that we've come through that
Very
whole
short time.
journey. Really interesting as well, like your point on being led down the garden path, which can so often happen. But then on the other side, when things do click, how quickly things can kind of take shape.
Yeah.
So,
well, the ball started rolling, and I think they were equally excited. They flew their CEO over, and you know, the conversation, the relationships there, and it's just amazing. You sort of forget how many things can go wrong once there's a bit, you know, going through that process.
Well, it's going to be an awesome session with all that context. What gravitated you towards Snowball Effect?
Yeah, so originally, I mean, I don't know most founders in New Zealand, if you've ever tried to do an IM, you've found Snowball Effect quite easily. They've got a really good template online. So I heard about Snowball Effect, and to be honest, as a company that really relied on consumers, I knew, you know, ultimately I really wanted to do a raise with them later down the track. So really always admired them as an investment group. And yeah, when the opportunity came up, I thought it would be, you know, super along my sort of background, and what I can sort of add as well, like understanding more the consumer and the private investor side of things, because obviously, you know, came from a background of a lot of sort of private investment, so had my toes in that, but also now the consumer side. And that's my other thing is, as a general Kiwi, I've always wanted to invest in small businesses. So when I meet cool founders, I've always wanted to put money into them. So yeah, I liked the fact that Snowball really sort of enables that for Kiwis.
Yeah, that's so cool.
Yeah.
And there's some decent amount of cash that's gone into the hands of helping businesses get off the ground. It's about 90 million and counting that's come through, and about 30,000 plus investors throughout the Snowball community as well.
Yeah, well, we're set to hit 100 mil in the next week or two, so very, very excited for whoever that's
cool milestone. Yeah, super cool. I wonder, Emily, if for those that are listening that may not be familiar with how Snowball Effect operates, could you give us kind of the rundown before we start going into different questions?
Yeah, absolutely. So Snowball Effect, we typically work with companies, you know, that are a bit more established. So, you know, really got product market fit. Typically have already done a capital raise. We're seeing quite a few now that have got pretty incredible revenue that are now going into the capital space. But we work with lots of different companies from lots of different industries. So this can be anything like FMCG, software, hardware, agri-tech, health tech. So yeah, I mean, we sort of get approached by lots of different companies, and equally we've sort of helped raise for quite a few of them. So what we do is one of sort of 4 things. The 4th one is somewhat not as prominent, which is sort of more the bespoke debt funding. But because we've got 27,000, I think, sort of retail investors. So that's, the likes of probably Casey and I and maybe a few others on the call. So sort of your Kiwi investors, and we've got around 3,500 high net worths on the platform. So our ethos is pretty much doing the whole capital raise online. So companies will come to us, we'll work with them on the information memorandum, getting them fully investment ready. And then obviously we take them to market. So that's typically sort of a 3-month process, but they can choose, between a public, private, or a top-up raise. So where we sit in the space, we sort of do the $1 to $10 million mark, which tends to be quite underserviced in New Zealand. There's a lot in the angel space, and then obviously a lot further north of 10 mil. So we obviously help Kiwi businesses raise through Kiwi investors. And we do that through obviously the online sort of process. Hopefully that.
Yeah, no, that's a really good kind of circle around what you do. So 1 to 10 mil is kind of the sweet spot, and industry agnostic is kind of what I'm hearing as well. Like it comes down to the opportunity. Okay, cool. And what would you say is the average deal size that comes through in that 1 to 10?
Probably sort of around that. It really, I suppose, depends on the type of deal. If it's private, we see, it might be an average of 3 mil, but or actually public as well. But the top-up raises might also be around, maybe $1 million. But typically we sort of are more in that 1 to 5 mark.
Cool. Okay, that's really, really good context. And folks, if you've got any questions, do push them through, and Emily and I will be happy to take them. So, I guess, Emily, what would you say when a startup or business is looking to come to you guys, or they're looking to do an investment round?
Yeah.
What separates a good opportunity that you're going to be able to really stand behind versus one that's not quite ready or not quite the right fit?
Yeah, I suppose like a lot of people sort of say, what sort of growth do you guys look at? What do we need to fit the mold? And I mean, we're sort of really open to lots of different companies. Like we see a lot of different opportunities. So realistically, a company's proven with revenue. So that's usually around sort of the 500, 800K mark, with obviously growth over the last 2 years and some sort of good strategic forecasts in place. So that sort of answers the question, hopefully. Sorry.
Yeah, that's good. So revenue being, and as John kind of put in the chat as well, as a good benchmark to make sure you're getting a bit of traction. And that naturally speaks to the raising the 1 to 10 mil piece. As you say, it's kind of a bit further along than say the early stage pre-seed side, where a lot of the angel investments play within that and seed. So that kind of...
Yeah, we see a lot of companies that have come off the back of angel or, I think in New Zealand, typically a company will go friends and family, angel, and then we're sort of in that sweet spot after. So, in that sort of 1 to 5.
What's it look like having 30,000 different investors? What's that do to the cap table, or how do you approach that to keep it nice and clean for the startup?
Yeah, so a really good question. I mean, for a lot of companies out there that are looking at raising, they get sort of scared off by the idea of having 200, 300 investors on board, but there's some really positives out of it. So typically we will put them in a nominee. So on your cap table, you will just have Snowball Effect nominee. And what we'll do is we'll look after that completely for you. So like I said to Casey, you won't have, 200 people emailing you, sort of wanting to get company updates, because we will be the middleman for that for you. But then there's like a really obviously positive side to that. So for instance, on some recent raises we've done, like I think Little Island and Zoom Health, they saw 200 to 300 new investors on board, which for Little Island, that actually grew them to, I think it was 15 to 30% growth in sales. So the other really cool thing about having multiple investors, is you've got all these advocates out there. And because we usually have a mix of high net worths and retail investors, it's a lot of a lot of feet on the ground in New Zealand talking about it, advocating for you. And it's not just limited to products as well. Like we're seeing it a lot in the software space too. So software getting some really good uptake once they've got quite a few hundred investors. But again, if it is a more private round, we might see a higher check size. and I mean, that's to the company as well. So the company can sort of come in and go, look, want to have a minimum of $500 so everyone can invest. Or they might say, look, I want a 10 or 50K minimum investment. So again, it's really quite curated around what that company wants to achieve and what we can do to help them achieve it.
That's cool. I hadn't really looked at the whole angle of bringing on a whole bunch of investors, and they stand behind Snowball, so it keeps it clean, but they nonetheless are ambassadors for your brand and your company, and help kind of drive that mission.
And the other thing is, like we were saying, is in your company updates, it's such a good opportunity to be marketing to them, updating them on what you're doing, so that again, you've just got this sort of like marketing funnel out there in New Zealand.
Question from Taz. Thanks for your question, Taz, which is revenue. Yep. But how do you define product market fit? And I guess where I'd kind of add to that a little bit is, are there any cases where the revenue might not be your 500 to 800K plus that you're mentioning, but there are other elements that build the case that it might be worth going ahead?
So we've seen a lot of companies that have got some really good opportunities at the moment, and that might be signing a big sort of distribution deal, or it might be a massive partnership that they're kicking off, but ultimately they'll have to fund that. So, if there's a sort of product market fit or confirmation that they've got some really good opportunity out there, that's something we can also look at. So it's not so much just revenue, it's also what their pipeline looks like, I suppose, for the next year, what the opportunity is, because we totally get it. We know that when you scale up, you've got a lot more overheads, and to sort of execute some of these bigger deals or partnerships, you will need to put a lot more in before you sort of start seeing the money come in. So definitely, we look at that as well.
Yeah, cool. We've got a question that came through from John, which is, you'll probably get to this, but the Snowball Effect largely focused around equity, but debt funding, what's that look like?
Yep. So on the debt side, we've only been doing this quite new. So it's quite a new sort of thing that we've been looking at. But around the 10 to 15 million, around 10 to 15 million of the 97 mil that we've raised is debt. So we have done, somewhat quite a bit, but it's something that we'll do within our sort of high net worth wholesale investors, and remembering obviously that we see a lot of companies turning to the bank at the moment, but the bank is probably a little bit harder on them around what they're looking to see. We obviously do something quite bespoke for those companies.
Okay, cool. And in regards to throwing lots of questions at you, Emily.
I'm just looking to see them come in.
Yeah, it's good. It's always great to get like the insights straight into what things look like. So the 30,000 odd different investors, what's the sort of makeup in regards to New Zealand based versus say overseas, holding in mind a lot of startups might be aiming to go global from day one, and they might be looking at different markets. What's that look like?
So typically most of our investors are Kiwi. We're seeing a lot of family offices from overseas coming in at the moment and wanting to invest. But the other thing as well is that for a lot of companies looking for some strategic investors overseas, what we actually do is we've got relationships with some groups overseas, so we'll bring them in. We also can obviously approach some of those bigger groups overseas and bring them in. So for a lot of companies, it might be hard to get their voice heard by these companies or get on the radar. So we will actually also look to do that. But typically, majority of our investors are Kiwi, with a big sort of increase, as you can imagine, of these sort of expats coming in with a wealth of knowledge that are now looking at backing sort of more Kiwi businesses too. So there's definitely quite a diverse group coming in at the moment.
Yeah, that's awesome. We've got a question that's come through from Steve, which is, are there any case studies or videos around what other companies have gone through to prepare for a Snowball Effect raise?
Really good question. So and I will be completely honest, we are working on our website. It really doesn't do us justice. So for anyone sort of like looking at our website, please just with caution. We really got to focus on this at the moment, because we know the ultimate way for founders to judge what's best for their company is almost off the back of what other founders are seeing. So typically when we meet a company, we will also introduce them to another company that's raised with us, that they can sort of have a bit more of a conversation around what they learned, what they found. On the case study side of it, so you'll see that coming up a bit more. When we talk to a company too, we can sort of open up a bit more around what we've seen, what numbers they've done, that might be relevant to that company too. Yeah.
Cool. Okay, and I suppose the other piece would be if anyone was to look at some of the current raises that are happening, then that also kind of gives a good indication of pulling together all the information that's now available for other investors to look at. So you can almost probably retro-engineer some of the thinking that's going to have to go behind how you could position your startup to be able to give that sort of information.
And the other thing to note, so like just a basic overview of the process. So typically a company will talk to us quite early in their raise process. So we don't, we won't expect them to have an IM or anything written. They'll come to us and say, look, we need to raise, 3 mil. We want to achieve this. They usually have quite a good growth plan in place. However, we have seen some companies that come to us going, this is what we want. How can we get a snowball raise? And we'll send them away to the right advisors and whatnot before then. But so we'll engage with the company for around, going back and forth for maybe a month around getting them investment ready. So that's, the IM drafting, validating the financials, validating their growth strategy. And then what we'll do then is when we've got it around sort of their documentation around 60 or 70% through, we'll start validating that valuation that we've agreed, because I know that's another big question for companies is how do we do a valuation? And I see a lot of companies going out there and getting sort of a big four valuation, which can also be not as realistic when you're talking to, sort of Kiwi investors. So what we'll do is we'll go and raise around 15% of the capital through high net worths, and again that's sort of like the process to validate their valuation. But also the reason why we like to do the IM is because it's a relationship building process. Say you've got a company that we're going to be representing you out there with investors, so we want to make sure we give you the best. We know exactly what you're doing, why you're doing it, why it's good for the environment. And sort of figuring out all those questions that we will get asked by investors. And then obviously we'll take a company to market. So we'll drum up a lot of interest before we take them to market. We do a lot of marketing, PR as well. And then an offer will usually stay open for around 30 days. And that's when obviously we'll be collecting and going through AML and whatnot with these companies. And then to your point, put them into a nominee. But yeah, so it's typically around a 3-month process. But there's definitely, it's also depending on the company. For Steve's question is, it also depends on the company of how fast they want to move. So some companies can be really fast. They've got everything in place. The lawyers and accountants move fast. They move fast. Where others can be quite slow. And that's typically down to just what resources they've got and what they're, how fast they can turn around information, I suppose.
That makes a lot of sense. We've got a bunch of questions flowing in, so we'll start hitting them. We've got Cormac, which has asked the question, have there been any instances of Snowball to listed NZX or ASX? And if so, is this seen more or less as positive during growth period?
So it's not something as of yet, but definitely something in the pipeline. So for a lot of Kiwi companies, their goal might be, to go public, or it might be, I think most people have got an exit in mind. But ultimately, what we do with a company is we'll work back from that. So when we meet a company, we'll go, this is the long-term vision. Let's work back. You've got, 3 capital raises you'll do between then. We haven't had one yet, but again, we've only been around since 2014. So as you know, these are sort of more established companies that get to that point. But definitely there's some exciting stuff that you hopefully will see in the next 1 to 2 years on that front from some of our sort of earlier companies.
And exactly as you say, it comes down to like your position before that stage, and all those seeds are being planted. I was recently had a conversation with a good friend of mine, Greg Fahey, which you guys will know through Vice and Dex, who went through Snowball Effect, and they're doing really, really well and crushing it. I'm a bit biased. They're a Dunedin-based startup, and I'm originally from Dunedin. But to your point as well, I love how you're saying you introduce founders that are coming through and looking at Snowball to other founders who have been through it, because the kind of context of the learnings and the experience, I think just speaks a lot, and he certainly spoke very highly of the process, which is super cool.
Yeah, because I mean, Bison is another really good example. And one thing we were talking about earlier around the top-up raise. So we also saw in the market that there's obviously a huge amount of funding available, and for companies, it's it's an exciting time to choose who sort of suits for your mission, what they can bring to the table, and so we actually now do top-up raises. So what that means is for companies that might be doing a full raise of 3 mil, that might have 1.5 already committed. Obviously if there's some prominent names in there or some good groups that have invested in them, they can actually come to Snowball Effect. And so Bison would be a good example. We would get them live within 1 to 2 weeks on the website, depending again how fast they can move, but we're pretty efficient now. And then again, the offer would be open to 30 days. So that could be either a public or private raise. But I mean, I think they closed, I think it was 375K in 48 hours or something near enough. So there are a lot of companies out there. I know how hard it can be to close out a round. So that's another really good opportunity. And again, companies are now getting to choose where they get investment from. And I'm seeing quite a few of them divvying it up. So they might go, you know what, we want 1 mil from this group, strategic customer. They might go, look, we want 1 mil from here because this enables, X, Y, or Z. And then they sort of are now looking at putting 1 mil with Snowball because they go, look, well, these guys are going to push us out to 3,500 high net worths that are going to have some pretty big impact. And then 27,000 Kiwis, get some branding and some pretty strong marketing out there. So we're sort of seeing that as well as something people are considering. And it's also companies out there to sort of get that speed to market and close out and get back to what they love doing, running the business.
100%. I mean, like as you were touching on before, like with your journey with Roma, of like sometimes you can feel like you're getting led down the garden pathway, or it can take ages on trying to raise money. And obviously they're doing it because they need the funds. But it takes you away from so many other important priorities, and it's a real juggle. We've got a really good question that's come through from Rich, which is, can you elaborate on the fee structure, such as the success fees, base fees, etc., and how does it compare with crowdsourcing platforms like PledgeMe? Yep,
absolutely. Really good question, and obviously one we get asked a lot. So typically out there, it's around a 5 to 7% success fee. So for companies looking to capital raise, if they're doing a full raise with us, we will charge around 20,000 for an IM. So that's probably a bit lower than what you'd see on the Big Four, but what we do is obviously that's not a profitable process for us. That's ultimately to get to know you, your company, and really get your investment ready. So that's sort of the only upfront fee. Does not apply for top-ups. And then you've got the success fee. So you'll set a minimum that we've got to achieve. So if it's 2 mil, with a minimum of 2 mil, we've got to achieve that. And we do have, I think, a 98% success rate of achieving it. So when we believe in a company and we take you to market, we're very confident you'll do well. And then again, it comes down to somewhere between the 5 to 7% mark, depending on, I suppose, the raise and a few different things there. But yeah, so a company realistically, it's a pretty standard number out there. And against other sort of crowdfunding platforms, I suppose you're getting really strong investors on board with a lot of governance and a lot of good processes in place. So yeah, our investors are quite savvy. They're quite smart. They know, they're good investors. And yeah, I think the process we take is somewhat quite professional too.
Cool. So then they raise, say 2 mil, and then that the base fee and then the success fee, if that has been set in there, just gets subtracted straight off that, and then the remainder comes through to the startup.
And so the other thing I think is that because we do have, sort of like in-house legal accounting and whatnot experts, our goal is to make sure that the company sort of gets the best outcome. So for companies out there that are judging their options with funding, there's a huge amount of skill you get behind it. We obviously take you through the whole process, so we don't expect you, like a lot of groups out there, to come to us with everything prepared to get the money. We're sort of a lot more, dare I say, hand-holding through the whole process. Like we look after the company, through that process.
Yeah, that's what strikes me as like one of the key differences is you become an ambassador and almost part of the team, to be honest, on actually helping go through that process, opposed to it being like the like a founder or a startup relationship to an investor, which obviously it takes time to kind of build the trust, make sure that the deal makes sense, and
Yeah.
usually the weight of that sits primarily on the founder, right? And it
Yep.
makes sense that it sits on the founder.
Yeah.
Whereas this is a different dynamic where it's kind of like if a startup comes to you and at a baseline it makes sense, but they don't have their shit together or not completely ready yet, then you're like, cool, okay, we can make this work. As you said, like
Yeah.
we believe in you. Let's do what needs to be done so that way we can together get this out into market.
We've definitely had some really good companies have that sort of situation too, where they've been turned down by other groups just for similar, or reasons. We've sent them off to the best of the best that we know that can help them. They've come back, and been incredibly successful with us. So, for us, it's a real relationship. And for a lot of companies out there, if you've got a snowball effect relationship, you know what it's like. You can come back. We'll do multiple rounds. We'll get you right up to the point that you're attracting sort of that much bigger raises elsewhere. So it's that process. We want to take you through that, and then when you're ready to go to those bigger groups, we want to have you fully prepared to get go to them.
Yeah, for sure. Got more questions flowing through, which is great. We've got one which is, apologies if it's been answered before, I don't think it has, which is, have you ever invested in pre-revenue companies?
So really good question. And as much as I'm a massive advocate for early stage companies, we've tried early stage before. It is really hard, and it's something that we know we don't do the best. It doesn't fit our investors as well as what we'd love it to. So typically we do not. We just find that's I suppose where we build the metrics of 500k to 800k revenue. We've just learned, we've learned from all the numbers we've got that it doesn't work as well. It's a lot harder, and there's a lot more funding out there in that space. So yeah, typically people will go just to individual high net worths or angels in that space. And I know how hard it can be.
Yeah, for sure. And I think that's a good answer, right? Because it allows people to, like the founders on this call, to know when it makes sense to approach versus when it does. Because our most valuable asset, after all, is time.
Yeah.
And being able to put the time in the most meaningful way to move you forward for the stage you're at is cool. So I really appreciate you being able to kind of cut it so straight down the middle on that. And of course, it's not to say you couldn't reach out earlier, right? And like have a relationship building. It's just that, that's the piece when it makes most sense, generally speaking.
Definitely. Like I've got a lot of companies I talk to that are too early for us, but I'm so glad they messaged me early because we're aware of them. We can make the intros. I've got some companies I've introed that they've now got a few 100k behind them to get to the point they will be with us. So yeah, ultimately we want to help you get to that point too.
We've got a question from Richard, which is, have you built any valuation models based on the deals and the data you have? And a follow-on comment someone made on that, which is, and if there are any examples on what was raised and what valuation?
Yeah, really good question. And so what we have got, obviously internally, is an understanding of what multiple each company has raised at. So we have got that. But again, like we covered a lot earlier, each company is so incredibly different, especially when we're looking up to almost every industry in New Zealand. So, different multiples for software, different multiples for hardware. Some might have a really amazing 12-month growth the last 12 months that we've got to factor in the fact that the next 12 months look incredible. So let's try and find a valuation that fits maybe 3 months or 6 months from now, where others might be a bit more slower, where we've got to find a bit more of a relative or relevant multiple. So I wouldn't say we've got anything, and especially nothing we'd push out there just purely because I know people get so caught up on valuations. But this is again, I suppose it comes down to what is an investor going to pay, and that's the ultimate way we like to figure it out for a company. So we like to give you the best valuation we can get while making sure it's solid, so your next raise is just as successful. But no model out there yet, I'm sorry.
If there is a founder though that is kind of grappling with that, would it make sense for them to get in touch and you can kind of give some pointers that are contextualized based on where they're at and what they do?
Absolutely. Like if you said, look, software company doing this or whatever industry, obviously we can look at what's worked in the past, what feedback we've had in the past, and help sort of indicate where we'd see that. But again, it's always safe to have a bit of a range as well in there.
For sure. And obviously, the more context that can be in there, the more accurate it can be, rather
Yes.
than generalizations that
Yeah.
just don't hold up. Another question from Grant, which is, thank you for your question, Grant. What are the considerations for determining the success fee?
Yep.
40% difference from 5 to 7%.
Very good question. I'd probably say, yeah, I mean, what we aim to do is do a package around the company. So what we've found is that not one size fits all for every company. Some companies can come straight in, we can raise really well with them. It's a fast process. They've got all the information we need. So I suppose it really is tailored for each company. So when we engage with a company, we'll discuss the fees. We make that very, upfront. So some companies, for instance, a top-up raise will typically be around 6%, but we're a full cap raise under 2 mil. And because we've got to stagger it too. Like, say if they want to be doing a 5 mil raise, you could not justify 7%. So we'd figure it out with them, but it's something we'd work up front with you. It's also just how much work we've got to put in. We've just got to make sure we cover that. So that's why the sort of fact-finding mission we go on with you early is just making sure there's no skeletons, there's enough information for us to go to market, and then typically we'll sort of reward a company with a better figure or better sort of success fee.
That makes sense. We've got a question that's come through from Ben from Kogo. Welcome, great to have you on the call, Ben. Ben's doing doing great work with Kogo for everyone that I'm sure are aware of the great work that they're doing. At Kogo, we have a medium-term vision of the majority of our ownership to be decentralized to users, staff, customers. Our current plan is to do this in one go, in a few years, $1 billion plus target raise, but open to ideas of doing this as we go as part of our Series A, B, and C. Are you able to raise on Snowball from people in multiple markets? We currently have 12 share markets and users and customers in 3 different markets. Big question, but do you have any thoughts on that, Emily?
Trying to remember that. Oh, I heard of the best memory. I suppose we totally know know Kogo, and obviously a really incredible mission. So we definitely jump on the back or join other groups for investing. I suppose it's really a conversation to be had. Or an intro to be made to have that discussion. I sort of got lost after we got towards the end of that, but part of our series to raise on Snowball for people in multiple markets. So currently we've been talking to a few Australian groups. We've also been, vice versa. We've had Australian investors come in. We've had Australian companies trying to raise in New Zealand too. Like I said earlier, we sort of do bespoke capital raises for each company, really depending on what they need. So I suppose it'd be worth having a conversation there, Ben.
For sure. Are there any limitations and challenges to raising money from multiple different countries?
I'm definitely sure there would be. I think the other thing I was going to say, and I know we sort of said about this earlier, Casey, is what we're seeing at the moment. So a lot of companies are getting a lot of interest overseas, and it's really exciting. Like I've spoken to multiple companies getting really cool term sheets from the US, really good opportunities in Aussie. So I suppose that comes down to the point of each of the founders on the call. Is the cool thing is you guys get to choose what you want and what's best for you. And I think it's also going down that long-term path too, is can you raise again? So if you've got a ridiculously high valuation, how are you going to go on market for that Series B or C later down the track? So that's something we super encourage in a conversation we'd like to have with companies is how do we get them to that sort of end point, what sort of capital? And we know that ultimately they will have to go overseas for a capital raise. Like we know that these companies that are doing incredibly well in, sort of the poster childs of New Zealand, they do end up raising overseas, and that's what we like to lead them to. But yeah, I'm sure there's a few different rules and regulations around it, and I suppose it's really down to the founder as what's best for their company. And is it worth it? Unless it's a pretty big, substantial or good name or good amount, is it worth going through all that? And especially in this strange world where you're stuck in New Zealand too, which is quite hard to create those relationships and validate that they are a good fit for your company.
Yeah, it's definitely not as easy to get in front of someone if they're overseas right now. we've got a question that's come from Rich, which was a clarification question. Whether the 20K to draft the IM was included as part of the success fee. If I understand correctly, Emily, it's separate and it's determined on how much work's involved.
Yeah, so I mean, for most companies, when you're raising over that $1 million mark, most of them will be getting an IM done. So the reason we like to do it, and I think I mentioned earlier, is it's a relationship building process and it makes us represent you best. What can be a struggle is some groups will go get their IM done. The companies here and the investors are here. So there's a big sort of mismatch of conversations happening, who knows what. So what we like to do is sort of centralize that, be the go-to so that we're supporting both the company and the investors, but it is separate.
What would an IM typically entail?
Yeah, so I mean, pretty much anything and everything an investor's going to ask. So everything from sort of your forecast, and I mean, we keep getting surprised at what investors can ask, and I'm sure for any of you guys out there that have raised, we still get surprised by questions, as I'm sure you do. So ultimately, I mean, with our sort of background, we know what investors are going to ask, and that's why we like to again prepare the IM so we have little questions as possible that can hold up the process. But everything, from where you're going, the team, what sort of structure you've got in place, what sort of markets you're in, clear cut. For us, it's really good. It's a really good opportunity for the company to sort of put everything on paper. And the other thing I'd say around the IM side of it is for a lot of companies, they've never really had the chance to sit and do this. Or sort of just see a piece of paper that's got everything that their company entails. So it's quite a good process for companies to almost learn a bit more around their strategy and where they're going and putting sort of their thoughts on paper. But yeah, obviously past financials are a big one. I mean, product. What are they doing? How does it work? What's the customer look like? What's the competitors out there? Yeah, sort of a larger version of a pitch deck with a lot more information.
Yeah, for sure. For founders that are listening that may not yet be at the position for Snowball Effect and the 500 to 800K or the other things that help for that case, but they are still trying to raise some money, and obviously an IM super helpful because it puts you in a position of power and knowledge to, as you say, like answer the questions that will come at you inevitably, and rightfully so, from investors.
Yeah.
Are there any resources that you'd point founders to? Does Snowball Effect have anything that we could point founders to?
I mean, you probably, I'm not sure if your SEO is targeted for Snowball Effect as mine, but if you search IM template, we've got a really good one online. So a lot of companies start with that. The other thing I'd say to companies that are earlier stage is do not get too caught up in the idea of doing an IM. Sometimes if it's a smaller raise, you might just need a pitch deck, which can be a lot easier. A lot of companies can spend a huge amount of time on writing something that they're not really in the age and stage of requiring yet. So definitely play online, but if you are sort of doing a few 100K, I would imagine you could almost do that on just a bit of a pitch deck and a decent DD folder with financials. Oh, you're awesome. You're onto it.
The SEO is good. It did come up straight away. Okay, but that's a really good point that you're making, Emily, which is that like with everything we're talking about, there's not a one size fits all, and you really do have to look at it from what are your circumstances and what makes the most sense with your time and your resources to move you forward.
And what investors you're getting on, right? Because different investors are going to want to really focus on different numbers or different information. So really depending, some people out there are getting really some really strategic investors on board, so they want to see what the relationship looks like between the two companies a lot more than they want to see what the company looks like on their own. So it's sort of just figuring that out.
For sure. Emily, do you have any key observations on the New Zealand investment landscape?
Yeah, I think, from my point now, joining it from the other side, understanding what it was like as a founder and now going on the other side, I see that it's definitely quite disjointed. So for a lot of companies, it is hard. Like I see it now from my point, which is you've got so many different people to talk to, so many opportunities. For companies out there raising, they'll go and talk to 20 different groups. We do all talk, we all sort of know who's raising, and that's another thing is probably not trying to stick a market for too long because it's not a good look for other investment groups going, they've been sitting around for 6 months trying to raise this 2 mil. We're seeing a lot of companies really getting some big names from overseas wanting to invest, but it's a lot of talk and it is a lot of time that they're spending. So I have seen a few come through, but I haven't seen as many as I'd like to see. So definitely, whenever I talk to a company and they're sort of saying they're in big talks with the group, just being really cautious to give them a heads up that, make sure they're very clear on what they're wanting and when they want it by, because some of these groups, are sort of, talking to a lot of different companies in New Zealand. But the other thing that I think is really cool is 2 years ago, it was us, or you guys as companies trying to get us to look at you. And now it's sort of the tables are turned, which I think has been a really good thing for the New Zealand landscape. So, now it's up to the companies to choose what fits best for me. Snowball Effect will get the marketing, we'll get the expertise, we'll get the governance, we can come back for multiple rounds. That works. Or they might go, we just want a private one high net worth in the space. So they can go chase that. So it's definitely a lot more in the favour of companies, which I think is better for New Zealand, better for the growth of these companies, and sort of, obviously leads us to a better sort of market for export as well. We're seeing a lot of investors, a lot of Kiwis aren't able to win at auctions or aren't able to travel at the moment, and not worth keeping their money in the bank. So there's definitely a lot of money flying out there wanting to be behind New Zealand companies, which has been really cool.
For sure, there's a massive surge in capital that's available, like exactly to point, a way over indexed market where it's just ridiculous.
Yeah.
So there is a lot more kind of diversifying investments, and the benefits of that are great founders and startups that are prepared to step up and be ready for that.
Yeah.
What about the general trend of things that you're seeing in the startup scene? Is there anything that you think we need to do better, that you think would accelerate how many startups get to even being ready for something like Snowball Effect, or go on to the previous question of hitting the NZX or ASX?
I think the big thing for me personally, I see is companies not having a conversation early enough. So they'll reach out quite late, and it's quite hard.
I need the money tomorrow.
Yeah. End of last year, definitely. Everyone wanted their close by December. But yeah, I don't think it's ever too early for us to be aware of you. And I think also making those relationships, like I know other investment groups want it too. We just want to know, who you are, what you're doing, to make sure we can help you get ready, because you can't sell a secret. And I know a lot of groups like to do it that way, but yeah, we ultimately like building relationships, and we know the investment side can be a bit long term, so we want to make sure we know you over the process as well, and are ready to jump and hop when you need us to. But yeah, from the startup side, from the earlier stage, I think the other thing is just really caution as to which investment you're taking on. Like I've heard some pretty scary stories in the last wee while on different groups, and I've heard a lot of people say to me, look, we've had this person I've just met that wants to put up 50k in my company, and I always sort of just say with caution, know what you're getting into, but you've also got to get out there. So a lot of very early stage companies don't talk enough, or they sort of are trying to keep everything quite quiet. It's definitely worth having, getting your name out, getting what you're trying to do, but also be cautious, put a bit of caution as to anyone who's going to want to put 50k in your company without knowing a bit more about it.
And what's it look like from a perspective of a founder that's maybe trying to build relationships with investors? Maybe they are on the tail end of feeling that they're ready for Snowball Effect, but they know they're not quite there. What's the kind of the gold standard, or what are good practices that they could be doing to start building and fostering those relationships?
Yeah, for a lot of companies I know, they've reached out and they've said, look, we want to be a Snowball Effect company. We think it will be later this year or early next year. We'd love to know the process. We'd love to know what we need to do. And that's what we want to do. We want to get you as ready as possible. So I've got some that are, very early, the 300k revenue, that will ultimately just push them in the right direction. And the other thing that's really cool is, now that I'm aware of them, we've made really good introductions along the way. We've met people that, because we meet so many people in a week, and I've got strategic intros. So some really cool ones that I obviously can't talk too much about, but some really strategic intros for these companies that have just blown them away. So they've got a huge amount of value without putting a dollar down, I suppose, which is ultimately building them faster than what they could have done without talking. So definitely some value in that just alone. And especially, some companies are sort of just going, look, we need an advisor. We need someone in the space that can just advise us. Have you got anyone in mind? And we'll come across people, in a few weeks and send them their way. So yeah, it's always good to know. I was always taught, put your map out there. Whatever it is, if you're raising, if you're trying to go into the Aussie market or trying to go into the US or whatever, put your map out there. Tell people what you're doing, and you'll be amazed at how much that will pay off. Because people talk. Don't tell them anything confidential, but unless it's sort of like your numbers early on, but people will talk, and yeah, things will just sort of naturally come your way.
For sure. I really agree with that. I think it's almost like a trifecta of reasons. Like there's many, but like exactly as you say, you don't know who's going to share that on to the next person or be helpful with a connection.
Yeah.
Something that can be challenging to take, but just as important, if not more important, which is saying, I don't think it's going to work in this piece. This part doesn't make sense. And sometimes that feedback can be bang on.
Yeah.
And it gives you an opportunity to actually reveal a blind spot that you can kind of reinforce what you're doing.
Especially those earlier stage ones that are doing a few 100K revenue or south of it, their customers might be friends, family. They've tapped out those sort of groups. So it's really important to have the hard word earlier, because I think, again, that's just going to enable them to do better. And as much as we don't like doing it, it's important. We know the value of it.
For sure. And then the other one is like, when you make a verbal commitment that you're going to do something, it does light a bit of a fire underneath you to kind of get moving and make it happen. So that's a good thing as well. Got one more question from Jesse, and then I'll throw to you, Emily, for any final words you have just as we look to close off. So a question from Jesse is, if a company has raised early rounds, how much dilution is considered too much? So much is too much to give up for an angel round. Yeah, how much is too much dilution to the point that you'd look at it and say, well, this is a bit
we've seen before. Yeah, really seen that quite a bit. Some companies, so they've just gone raise after raise in the angel space. The angels can only come in at a certain sort of age and stage typically, and I'm not speaking for angels. So we've that they're quite diluted. So when they come to us, sort of get concerned that they haven't looked at us and similar companies earlier. I mean, our rough golden rule of thumbs, and my personal one, I'd say, is 20%, up to 20% on a raise, because that sort of should look after you for quite some raises, point of exit. But I think anything more than that, there have to be some serious sort of reason behind. The other thing we see a lot of companies do is they might come to us and they might say, or other groups, and say, look, let's raise $1 million now. We'll raise the other 2 in 12 months, just to protect their, just to protect them, I suppose, and give them enough to execute, but also with a bit of a wallet to go back to. So for us, that's what we like with our companies, is to have a relationship where we know, hey, look, this company will be raising again in November. Cool, we're ready to go. We know that they're raising. We know, let's help them hit those milestones so they don't over dilute. But we've done the 1 or 2 mil in February. They'll be back in market in November, and that just protects them. So I think that's why you want to have good relationships with a few other groups, and that's why I think we really strive to have good relationships with our capital raising companies, because we know they'll be back in market some soon. So we want to make sure we're ready to go for them.
Cool.
But you don't, I mean, the dilution thing's a big question, and I just cut out.
You cut out on that last piece, but on the dilution piece, yeah, it's absolutely been increasingly a topic of conversation, and rightfully so, to protect founders, but also protect even the investors, because if you make sure that the dilution is in a reasonable place, it's actually going to help with the sustainability of the founders, and ultimately put the whole business and startup in a better position to succeed in the long run, where everybody wins. So it's about kind of finding that right balance. And there's some really good resources that have been put out there, which is cool. Emily, it says you're reconnecting, so I hope you can hear me. But do you have any words that you'd say to the community before we wrap this up? I think waiting to reconnect, folks. I think we'll call it there. Very, very grateful to have Emily join us today. Phenomenal founder, having walked the walk herself, and now being in a position to help many other founders with that raising journey is pretty cool. So if anyone wants to be connected with Emily, hit me up. I'll be more than happy to make a direct intro. Of course, you can also find her very easily, Emily Heazlewood, on LinkedIn, as well as Snowball Effect, of course. Have a great day ahead and look forward to talking soon. And her email's in the chat there, I can see. Right, take care everyone. Bye.